Okay, now it's okay. They cut their own purchases by half from 30 to 15, and that's to start from September. The immediate impact on the euro is bearish, logical. So far, no real surprises when we connect all the things together, especially when the rates in the US went up and there is a hint for further hikes to come this year and the coming period. The impact on the euro dollar is bearish, and so it is on all the European pairs. And that's the main update that we have for today. Our idea was on the euro dollar, start looking for the sells at the zone of 118 up to 120 top. Right, this was the final area. We got the movement all the way to 118. This zone cleaned twice, 1, 2, and we saw the reaction. So while the top holds, the whole idea of the euro dollar is basically bearish. Again, the news from the eurozone itself, the fact that US make showing much better results, 1 plus 1 normally equals 2, and the euro becomes bearish. There is only one scenario, and currently it's too early to judge, but this is a scenario we do need to keep in mind. A possibility for this to turn to be, I'm doubtful it will, but it's always a possibility that we need to respect. As a triple, if it holds here as a double this area, and again, as for now, I'm doubtful it will, but everything could happen. This could turn to be like an extended triple cycle. So, extended double cycle, 1, 2, and then move to new lows. But the plan is very simple: sell rallies. That was the plan. That remains the plan. We wanted to see this short-term rally towards 118. We enjoyed from it, and now it's time to start looking for the sell setups with all its meanings. And according to the daily, we expect this. Right? You remember this scenario. So we would like to see the final leg taking place, ideally cleaning this low once again towards 115, maybe slightly lower. From there, very likely we will be after buys and deeper sell, possibly. So that's basically all for the euro dollar. Any questions about this one? So far follows the levels to perfection, I would say. To perfection. The levels respected beautifully. Great. No questions. We continue. Next on the list is the euro versus the pound, another pair that we are after sells. Keep in mind, guys, we are approaching towards the top of the range. There is kind of a double top holding here with a bearish divergence. This day is critical, as you can see. We shall see where the wind blows from here, but the idea is, again, bearish. By ideal setup, we wanted to see that crossing towards 089, 090 for sell, but again, the weekly pressure is bearish with this triple cycle. So for us, whenever the sell comes into play, we would want to go with that. Now, what happens on the 4-hour chart currently? We are facing the attempt to break this trend line. And for the first time, well, we don't have any convergences here or here, but for the first time, we do have the creation of a short-term lower lows with MACD gaining the momentum. So for an aggressive approach, and I repeat, an aggressive approach, that's the only one in these scenarios, we would want to see this mini triangle breakout, retesting, holding, and forming on the shorter term probabilities for sell. That could be two waves pullback, that could be bearish hitting divergence on the lower time frames, that could be retest of the broken area and a reversal with a candle pattern. There are several variations how a trend will continue from here, but this is only aggressive approach. And the reason it is aggressive approach is because for the longer run we're still stuck in the range. There is no convergence, not on the daily, not on the 4-hour chart, nothing that really creates the new low, right? And therefore the approach here aggressive. It's very good technical, but it's not good enough to make us risk a normal risk in such trade. Which means if we are, for example, working with 0.5% per trade normally, then this will require 0.25% risk. Okay, if you are working with fixed lots and let's say you are doing 0.2 lot per trade, just for example of numbers, then this will require 0.1 or maybe even lower. Okay, so this is the idea of aggressive setups. All right, now Euro Pound is another one giving us the bearish call. Euro Aussie, I would say, reacted perfectly, basically right to the zone as we imagined that at the beginning of the week, and simply perfection. This was the convergence we were dealing with, and we were after short-term buys. We got the two waves here and a breakout. We got a beautiful rally, and this rally led us to 1, 2 double cycle, bearish divergence, followed and confirmed by daily bearish hidden divergence here. We can't ask for more. It reached right to the psychological zone of the 157, missing several points, and starting its move to the downside. Our long-term plan here was and remains bearish, and it was activated beautifully with this double cycle and the bearish divergence. Okay, so that's for the Euro Aussie. So far, so good. Euro versus the Canadian, another pair that gave us Tiat, what's that? I got out from Euro Aussie after 100 pips. Oh, perfect. Perfect. Well done. So sell rallies was and remains the plan there, right? Euro CAD is another pair that we have been following the weekly cycle. Quick reminder, this is our weekly cycle. Again, guys, you can see that most of the updates are from the Eurozone, but it makes sense, right? Because this is the most sensitive environment currently, and that's why most of the opportunities come from there. It doesn't mean we have to overexpose to all of them. It definitely means we should pay attention to the ones that give us the best setups with the strategies we use, right? Quick reminder, we first of all define the directions, the levels, the zones we want to trade from, and the directions we want to trade from. That's based on cycles. We confirm that with the setups of divergence convergence. And not setup, sorry, the creation of divergence convergence. And we trade that with the setups that everyone trades. Some trades with one strategy, some trades with other strategy. It could be trendline breakouts, false breaks, it could be candle pattern reversals, support resistances, trendline bounces, any system like a manual trading system, SRS, Triple B, or whatever it is. So whatever your arsenal built with, you apply that after you define your seller direction. So EuroCAD, we were after rallies and sell, right? This remained the plan. On the short term, we were after buys because of the daily cycle. 1, 2. We got it. We got both happening as we wanted. We got a rally. We got a bearish hidden divergence between both highs. Pretty beautiful scenario, pretty beautiful levels, and the pair is back to bearish. As long as this top holds, we are back to bearish. Now, exactly like with the euro dollar, this is a possible triple cycle, but for that to happen, it has to do something like that, which at this time, I'm doubtful it's able to do so. So, bearish it was for the long term, bearish it remains. We got finally the breakout below the rallying trend line. We are holding the top and the psychological zone 153. Remember the clearance area? We always talk about it. This is a clearance zone. It cleaned it to perfection and moving. Of course, news contribute in this situation, but news are the main momentum for continuation or game changer. All right, so that's for the euros. Euro yen, same story, unchanged for us. Currently holding the top here, breaking this double cycle. Okay. To be honest, euro yen is one of the only ones that I like less, even though it's still correct. I like it a bit less from the others, but it's still correct. No hesitations about this one. Euro franc is another one that pays us. We are with sells above 116, 116.50. It holds. Trend line broken. This was the last one. We got a movement. So far, so good. And expectations for the euro franc were and remain same like the other euros, right? That was the one we are after. This is the full scenario we are following. Again, want to remind you, we don't want to overexpose to the euros. So the ones that give you the best setups with the arsenal of systems you have, of entries rules that you follow, that's the one to go with. Good. Any questions about any of the euros, guys? It was pretty quick, but again, we don't have any changes here, so. All right, wonderful. The next ones on the list are the pounds, pound, dollar. Also, our scenario, the whole scenario was sell around 135, 136. Acceptable 134, 135. Acceptable up to 136. It never managed to break this top. Holding it, fighting it, creating its bearish pressure. We are most likely heading towards new low. Again, most likely. And that should be something like 130, 128 area, where from we would be long-term buys with this divergence to develop. So as long as, and this is very important to mention that, right? As long as this top holds, this is our invalidation. We are good to look for sell setups, sell rallies, right? And again, why invalidation here? Because it could easily turn to be something like that. Deeper double for new low. With all the circumstances currently created in the fundamental area, very doubtful it will. And that's why we have to name that correctly and we have to protect it correctly. This is why this turned to be invalidation area. And the idea for us is to aim for a new low. That, of course, brings the impact to all the other pound pairs. I'm not going to go over all of them because our plan is basically the same for all of them. Sorry. Okay, so for pound Aussie, we are bearish. We wanted to see the bearish return. So this is currently what is creating for us. 1, 2, 3. We would want to see at least 1, 2. After that, we will see how it goes. One more here and crash, or straight continuation. But for us, it's for long-term sell the rallies. So no changes here. Pound Kiwi is the only one that is kind of stuck inside a range still, so maybe not the best to trade. But my view on this one is also this. So I want to see duplication of that. And as the first leg was a special cycle, look here, 1, correction 2, correction 3. Same I expect here, 1, 2, 3. And this should bring this area into a massive buy on the next several weeks. Okay, so definitely beautiful one. Pound Canadian is another pair that we have on the list. We enjoy from short-term trading there, short-term rallies. I would not deal with this pair for the long term, simply because we have no cycles. But for short-term trading, this pair is a bit different than the others. It's creating triple and very likely double. Remember this range? And now it's probably making the second leg. So if it managed to hold this area and a retest of this broken trend line, that should be a good buy opportunity. Meanwhile, on the short term, I think it has all the reasons to continue into this kind of format. Short term only, guys, because this pair really, it has no cycles on the weekly, it has no cycles on the daily. And due to the daily creation, this 1, 2, 3, I would not be surprised if we run something like that for longer run. So that's why my view on the short term is, you can take this, right? You see the 100, this is the first zone, this is the second zone. And that's the places to aim on the short rally. So something like that, boom. If it continues through, boom. Depends where the next divergence will form, right? This should be the ending part. So that's for the short term, but again, I wouldn't rely on that on anything longer from here. Okay, pound franc currently untradeable from my point of view. Falls back on top, falls back on bottom, turns that to be a range, and we're stuck inside the range. So not something I would really want to deal with. I do want to see one more attempt for fake high for another bearish portion. Not currently. It has nothing encouraging to trade at this moment. Okay, a bit of Pacifics. OZQ, we start to pay attention to these levels. It's a bullish hidden divergence on the daily chart, and it is bringing us to a perfection levels. One and another one is here. Why do I mark these areas? Because if we drop the cycle on the current correction, we would figure out that we have the 100 right here and the 161.8 slightly lower. So the areas of 107 and 106 become critical levels for buys, for the next portion of the buys. I will remove these blue lines. Now take a look how the first cycle developed. 1, 2. We can even break it into 2 more in, right? Take a look how this cycle is developing. So it's perfect zone right here or slightly lower, wherever the divergence will take us into the play, and start looking for the reversal and for the buy continuation. Currently there is no divergence on the ending part because no 2 candles rule in play here, so we can't really rely on that. So what I would like to see with the OZ versus the Kiwi is one more clearance, maybe even 2 more clearances, and mainly turnaround, which means higher highs. At that point, this trend line should be also broken, and this is our buy. So it could happen today, it could happen tomorrow, it can take some time. We don't know how fast exactly it will happen, but we have the level, we have the confirmation in terms of divergences. We are looking for the setup for the turnaround, the confirmation for the turnaround, which should be followed with false breaks and trendline breakouts or higher highs turnarounds. Okay, and this would be our buy setup. I would not rush into a buy here, even though it looks simply wow, for one reason. We have no false breaks, no two candles in play, nothing. This is a classical condition for stop loss hunters. Why? Because you can imagine how many traders jump into buys right now, right? You know the song, Just Give Me a Reason. So you can imagine how many traders say now, oh, it has a support, let's buy. Oh, it has a support, let's buy. Oh, it has a trend line, let's buy. That's the normal logic of the traders. And for stop loss hunters, this is simply ideal conditions. Because the traders buy, they start to look great and make one more load to clear the stop losses. The traders give up, and then the pair, of course, continues, right? Typical behavior in many of the cases. So I wouldn't rush into any of the first sign, like a stop and a candle pattern reversal here, just because of the reason I just explained. I would definitely have this one on my watch list for the turnaround to happen. Maybe today, maybe tomorrow, maybe in 2 more days. Okay, but this is definitely the place where we do want to follow up for the reversal. Cat franc is a pair that we had on our list, and we wanted to see the breakout of this channel or a new low for a false break for buys. So we don't have a new low, we do have the breakout of the channel. It was pretty lazy yesterday. It's moving much better today, gaining some momentum. Again, we don't have any higher highs yet. This is the most critical high. We don't have any higher highs. We don't have triple cycle to the upside yet. So it's hard to name that as a long-term reversal. And we probably shouldn't, right? Yet. But it has all the reasons to trade it. Simply because our weekly, monthly cycles are bullish, the daily divergence is bullish, and the 4-hour chart situation is bullish. It's a cycle by itself with a fake convergence principle gaining itself right here. The levels are amazing, so it has all the reasons, right? Of course, not for long term yet, but for short term, definitely yes. And this short term could turn to be long term if we do have the break of the last high or triple cycle push to the upside. Definitely worth to pay attention to. So that's basically from the Forex side. I don't have any other updates here. I do want to cover 2 pairs that I have been asked about on the morning, and that's the dollar yen and the Kiwi CAD. Kiwi CAD holding the levels so far. It does not have any lower low critical for us, yeah? And that point doesn't have any lower lows to gain real momentum and convergence. It does have a trendline breakout. Sorry for my ugly drawing. Let's do it this way. It does have the trendline breakout. It does have the retest. It does have the divergence. It does have everything, just not one more low, which could still happen. However, this pair was and remains only for a sell setup for us. Weekly cycle and monthly cycle are bearish. Daily cycle is bearish, hidden divergence. Daily momentum is bearish, hidden divergence. The 4-hour chart is a special cycle by itself with the divergence, with the false breaks. The way I see that, it's only a question of time. So for me, it's only sell the sell setups here. Dollar yen. Now this one is a bit tricky. What we do have on the dollar yen is still this range, right? That we have been talking about. Tatola, I will cover the gold, okay? In 2 minutes. I finish the Forex, I move to commodities. So what we have here is this range, and the fact that the weekly is still a bearish trend line with a bearish hidden divergence between these two highs, right? Bearish hidden divergence. On a daily, we are in a corrective cycle, which in that case turned to be a range, right? We had something like that, now a corrective cycle in a range, so very, very possible to see movement like that. Of course, we can see one more fake breakout here towards 112 and then move down. But for us, it wasn't remain sell rallies. Now, if we drop to the 4-hour chart, look what happens here. This is pretty rare situation, but important to pay attention to. There is a trend line of the double cycle that never was broken, right? We never got trend line breakout, we never got lower low. On the same time, we also don't have divergence between these two highs, right? And if we really pay attention to the 4-hour chart moving average, we will figure out that even there, divergence is not in perfection. So normally this is a sign for continuation. However, we are in a range. In range, the divergence is not something that we will want to rely on. There is no bullish hidden divergence for continuation on the 4-hour chart, right? So that's where it comes into the wonder. So what's next? And my point of view here is it has all the good conditions for a possible sell. And the way to do it, the best way to do it, is get the 2 waves from here. That could be even for a new high. But once we get the breakout of the next 2 waves, this is on most of the cases is a good sign for the correction to begin. Of course, the two waves could be even inside or here, right? And then a breakout. But even if they do have a new high, with the current situation developing, because we don't really have the turnaround, we don't really have the continuation. So 2 waves and breakout normally in such conditions is one of the best signs we want to work with. Dollar yen starts to be very interesting pair to follow. Commodities, gold and silver. Well, silver is finally good one after the break of this triangle, and the range continues beautifully. Quick reminder, our long-term target for the silver was and remains the first one, 118 zone, which is the top of the range, and the final one is, according to this cycle, I know it sounds very, very impossible right now, but we are aiming at least the zone of 27. It should take long time, so don't rush with that. We're still stuck inside the daily range, this one, the big one, so we really need to get out of it first of all, but this would be the final destination. So the bullish momentum continues. Same with the gold, which is holding the 1280. We had 2 levels in play, 1280, 1260. 1280 was the last one that spiked and holding. It was moving extremely ugly for a long-term period, long enough, right? It's you can see yourself how long it was. But then it managed to get out of it. So basically the idea is simple. As long as the last low holds, the gold is in a bullish condition. And I say as long as the last low holds because of this reason. It could turn to be double cycle correction and one more low toward 1260. Definitely a possible scenario. So we don't want to fight that if it happens, right? So this is the situation. We do gain the momentum here. The MACD creates new highs. Therefore, it's bullish. And with the strategies you use, pullbacks should be considerable as buy direction. Okay? Again, with the strategies you use. That could be with a bullish hidden divergence to appear, that could be with two-way trend line breakout, or any other system in your arsenal that you use. Okay? Silver, oil. Oil also we are after sales. It seems that it's building up here some attempt for bearish hidden divergence on a daily chart. I wouldn't be surprised if we see that on a daily chart. It's not too far away. Anyway, the 4-hour chart, currently the trend line to be broken is here. So the idea here is to let that move, form that together with the daily chart. So once the daily makes the reversal, 4-hour chart has the divergence and get the breakout. If we improve the trend line here, it would be of course ideal, but for us, we want to see the sells. The best areas for that would be 67, 10, 15 area first of all. Then we have the duplication, which is 67, 80. That will be the best places to spot that happen. That's all. For the oil, looking for the turnarounds, we do want to see the trend line breakouts, of course, to get our confirmation for a possible ending of the correction. Indices, and here is an important update, because indices, with the latest news from Eurozone, DAX is back to neutral. It never managed to break this trend line for us yet. It never managed to create lower lows for us yet. And now with the news, it's kind of invalidating the scenario. It could be the case that will push the DAX through new highs. So something like this. Definitely a possible scenario, which there is no sense at all to fight. Let it go. We will be looking for the next interesting setups to form. Same with the Nasdaq, which we are still waiting for the second false break. Too early. I remind you the level 73, 73.50 would be the zone where we want to see. 4-hour chart already had one false break here. So we would want to see that completing the job, one or two more before the turnaround with lower lows. It will take time, so indices are currently not in play. And the most important thing is the DAX, which is returning to neutral. It makes sense, it will create new highs. Does it make sense to go bullish here? My view always is the same. When we face bearish divergences from all the time frames, the higher time frames, it's neutral. It's not bullish, even though it does make sense to see the Nasdaq moving to the upside at this stage. So that's my view here. And cryptos, thank you very much, Shell. Thank you very much. Cryptos also have no change. We have the critical zone for the reversals. Majority of them, the Monero, the Ripple, Ethereum, Litecoin, they all are on the zones we expect the reversals. Give it some time. It needs to gain it. Okay, gain and turn around. So no rush, especially not before the weekend. So that's all for today, guys. Thank you very much for being here. As always, wonderful weekend to come. And with the Euro pairs, do not overexpose yourself. You can diversify that. Some of them are for the short-term trading, some of them for the longer-term trading, for example, like invest. That's okay, but don't put all the eggs in one basket in that case. Okay, don't do these mistakes. It's too easy to overexpose and too easy to regret. So a slow week now turned to be a volatile week, and it's another proof to us. Patience pays off. Happy World Cup matches to everyone. Thank you very much, Tiad. And I hope you enjoy your national team making some respectful matches. And I hope this is going to be a wonderful event. So once again, guys, thanks for being here. I'll see you in the Telegram groups later. Wonderful trading and day to everyone. Bye for now.